Hello and welcome to CATEX-TV. I'm Tom Bailey. It's 4:30 p.m. in London, it's 11:30 Eastern Time, and it's 12:30 in Bermuda. Today in history. Today in 1945, 334 US B-29 superfortresses attacked Tokyo with over 120,000 firebombs, creating a firestorm. And today in 1949, the England cricket team beat South Africa by scoring 174 runs in 94 minutes. That's a very different display to that they're putting on at the moment. And today is the birthday of Jonathan Jackson, the well-known British intellectual and political commentator. And now to the news. All dogs could be insured under dangerous breeds plans just released by the government. According to the government, all dog owners in England and Wales would have to insure against their pets attacking someone. Police and local authorities could also be given powers to force owners of dangerous dogs to muzzle them or even get them neutered. There's been no response from anybody in the insurance industry at the moment, but clearly it's an opportunity to further sell pet insurance to their customers. And now to follow up on the news from last week that Prudential is to buy AIG's Asian life insurance arm. Prudential has now said that it will rush through its Hong Kong listing in a bid to underpin its record-breaking £14 billion rights issue. The insurer hopes the announcement made yesterday will help avoid a shareholder backlash by attracting Asian investors to shore up its share price before embarking on the mammoth fundraising. Pru will also hope news will convince existing shareholders that they will not be forced to carry the weight of the deal by themselves. The insurer is on the verge of its audacious takeover plan of the Asian operations of American International Group, and the deal is valued at £23 billion. Shareholders, however, are sceptical about the amount they're being asked to stump up, and the 75% approval rating the insurer needs for the deal to go ahead could indeed be in jeopardy. Excuse me. Merrill Lynch analyst Blair Stewart yesterday wrote that shareholder approval of the deal cannot be seen as a given. The insurer will now begin a charm offensive aimed at convincing existing shareholders of the long-term deal value. It was buoyed by the news last week that the Qatar Sovereign Wealth Fund and GIC, Singapore State Fund, will underwrite the rights issue. French insurers AXA and the AXA Affin Gen Insurance, the Malaysian subsidiary of the AXA Group, has received approval from Bank Negara Malaysia to acquire 80% of BH Insurance from Boosted Holdings and 20% from Felder Marketing Services. The completion of the acquisition is expected to take place on approvals of the respective shareholders. Integration of the two insurers' businesses will commence after regulatory and legal approval. Jonathan Mathumsey, CEO of AXA Affin General Insurance, said, referring to BH Insurance's expertise in commercial insurance, AXA Affin General Insurance is looking to expand into this sector. The business portfolio and market sector of the two companies complement each other, and the combined strengths will reinforce our position in the market. Spanish insurer Mapfre has forecast a €20 billion revenue, which is $27.35 billion for 2010, according to Chairman José Manuel Martinez. The company expects to grow both in Spain and abroad. Although 2010 will not be easy despite the international crisis and the natural cataclysms such as the earthquake in Chile, Mapfre will grow on international markets and will keep significant rises in Spain. The company closed 2009 with revenue of €18.83 billion, which was up 6.3% on the year, and a net profit of €927 million, which was up 2.9% on the previous year. AIG, which is on a big selling spree at the moment, obviously the deal we've just spoken about with Pru in Asia and selling its life business in the US. AIG is now selling its remaining 13.8% stake in reinsurer Transatlantic Holdings, which is owned by American Home Assurance Company, which is an AIG subsidiary. Reuters has reported that the 9.2 million shares are worth about $500 million. In a statement, the insurer said AHAC currently intends to commence such an offering on or prior to March the 9th, concurrent with TRH's addition to the S&P Midcap 400 Index. AHAC intends to have a portion of the total shares offered reserved for purchase by index funds. Marsh McLennan MMC is putting its corporate investigation unit Kroll up for sale for about $1.3 billion. The Financial Times reported yesterday, citing people familiar with the situation. Carlyle Group, Apex Partners and General Atlantic are all filed bids by the deadline for first expressions of interest in February, and the FT continued saying that Marsh & McLennan aims to gear its corporate structure closer to its core insurance business. Chilean earthquake losses sustained by the nation's insurers and reinsurers should be manageable, according to Moody's Investor Services. The ratings firm in its weekly credit outlook noted that Chilean insurers use extensive reinsurers to keep their net loss retentions at relatively low levels in order to protect their solvency margins. In an analysis written by Rodolfo Nobegra, the senior vice president analyst, the firm said that the Chilean insurance reinsurance industry will handle the considerable exposure. It noted that modelling firms estimate insured losses of between $2 and $8 billion, while the Chilean Insurance Association estimates $2.6 billion. Moody's said that insurers' profitabilities will be pressured by these losses, which are largely driven by an increase in overall loss ratios, as well as by the need to replenish catastrophe reserves. And more information on that Chilean earthquake. Bermudan reinsurer Partner Re estimates its expected claims from the recent earthquake in Chile to be between $220 and $320 million, out of what they are saying is a total industry loss of between $6 and $10 billion for the European windstorm Xanthia, and it cost 40 to 70 million out of a total industry loss of $4 billion for that. So Partner Re are reasonably optimistic about that outlook for both the Chilean earthquake and European windstorm Xanthia. And finally today, the British military apparatus is beginning to gear itself up for a growing spectre of cyber war. We've had a story which was that Harry was a Russian Secret Service agent who spoke perfect English and wore cowboy boots with his uniform. I never knew what his face looked like because he wore a mask during the lengthy interrogation sessions he put me through during 5 days captivity in the Federal Security Service, FSB, hands in Chechnya in 1999. The first item taken from me by Harry and his friends was my laptop. I was much unnerved as I relived when it was returned to me on my release. Can I have it back? Yeah, have it back, the FSB agent replied and laughed. Within 24 hours of arriving home in London, the laptop was deluged with spam, pornography and Russian hate mail, eventually crashing completely. The act was more a digital slap on the wrist than attacks the Russians would allegedly inflict on entire countries several years later, but it was the first experience of cyber war. This was from a journalist from the London Times, and what it shows is that just how to what lengths the former Soviet bloc will go in order to inflict cyber war damage on companies and indeed countries. And the British military establishment has announced that it is setting up a team to monitor and deal and potentially counter such threats to our increasingly digital economy. Well, that's all from us today. We'll be back with you at the same time tomorrow. Until then.